In this video, I'm going to show you how I use the cash secure put to knock down some quick profits using support lines for some of my favorite stocks that have fallen. You too can use this strategy. Stick around. You're going to like this one. Let me show you my Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, I have a good one for you today. We're going to talk about the cash secure put and how I use it in times of volatility. We can use the cash secure put to pocket those near-term volatility crumbs. And I'll tell you what, I love using it, and I think you'll enjoy the trade I did just this Friday. Love using the cash secure put. Hey, look, let's go ahead and get to this. If you've never been to my website, CTP Dashboard, head over there. I have all the free tools you'll need to keep the numbers in front of you. I got spreadsheets, trackers, calculators, all for free. They're all posted at ctpdashboard.com. And look, if you haven't been to my Facebook page, just click it right there and head over to where we're having the off YouTube discussion. We talk about all kind of things, and I even post up various trades and things we're doing. In fact, I just posted a podcast on my website. If you're interested in a poor man's covered call, just did a podcast talking about how you can use the poor man's covered call. And I'll tell you, a lot of people love the unedited car session podcast where we just talk about the cover call strategy. We talk about it, so maybe you learn something, maybe you get a little bit closer to it. You feel more comfortable, so you'll do it. So hey, look, if you like what you're hearing today, go ahead and subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're talking about the cash secure put. It is a tool in my toolkit that I love using when we sell premium. We're looking to generate some short-term profits, not necessarily wanting the shares being assigned. I love using volatility because for me, if I pick a great stock and that stock has been sold off so far that we're getting near support, Wall Street will probably come back and buy them at support. So I need to be ready. I need to have my homework done, and I need to be ready to act. And that's what I did this past Friday with Adobe. And the news on Adobe, I'm not quite sure. We're going to talk about it here, but for whatever reason, Wall Street is selling them off, and I use this as an opportunity to just bag some short-term cash secure put crumbs. I have no expectations that I'll be assigned these shares. So let's go ahead and take a look at this trade, how I set this trade up, and see if you would do the same thing. Now, as you see right there on screen, Adobe's trading for about 265, 266, and I went ahead and wrote the 255 cash secure put, ended up picking up $4.25. Now, here's the thing. I do it on 100 shares. I don't want to overreach, right? It is so easy to be so caught up in all of your research. You feel so comfortable, you'll just go ahead and overreach. I would love to own 200 shares of Adobe, but in this case, I'm going to do this in a very measured fashion. I'm going to be very disciplined. So I'm going to risk 100 shares right here, right now. Now, let's talk about that before I show you the actual trade. Remember what a cash secure put is. Cash secure put is the opposite of a covered call. In the case of a covered call, we go ahead and buy 100 shares. We then go ahead and give somebody the right, but not the obligation, to take those shares away from us at a price we pick for a time frame we pick. We collect that per share premium, and that's our guaranteed income. A cash secure put works the opposite, where what we're going to do is we're going to take the money of 100 shares and we're going to offer it up to Wall Street. We're going to say, look, I'll buy your shares, and in this case it's Adobe. I'll buy your shares at $255. I'll give you 30 days to make that decision or assign me those shares. But you got to pay me a premium for setting that cash on the sidelines. Because remember, when I do a cash secure put, I can't touch that money till the trade expires or I take action. And in this case, that's what I did. I wrote a $255 30-day cash secure put, setting aside that money. It'll sit there for 30 days. And if this person, whoever this person is that took this trade, they're sitting there with insurance in their hand, right? They're sitting there paying me $4.25 per share up front so they can assign me the shares at $255. I don't know why they would want to assign me the shares at $255. I can guess that it's insurance. I can guess that that person, whoever that person is, they cannot lose any more than $255 on this trade with Adobe, right? The idea here is they own Adobe shares and they don't want to lose anything more than $255. Well, the way I see it, that person that needs insurance, well, I'm going to play right into their game because I think I'm going to be able to time this perfectly where I take their money, they get their insurance, but Adobe turns and goes the other way. And remember, if it turns and goes the the other way, away from 255, my $4.25 premium that I received for this is going to shrink because the likelihood of this trade expiring where I'm assigned those shares at 255, well, that's going to be highly unlikely if my hunch is right. Let's go ahead and look at the trade. We'll talk about it. We'll talk about why I did this trade now, and I think you're going to learn something. For those that are not familiar with the cash secure put, this works just like a covered call, but in reverse. You have to have done your homework. You have to want to own the stock, because if you make this play like I've made right here, I better want to own Adobe at 255. And if I get stuck owning Adobe at 255, well, I'm going to be assigned the shares. They're going to take the money out of my account. I'm going to get 100 shares of Adobe at 255. So in this case, I better be right. I better have done my due diligence. And in this case, I think I have. If we look at Adobe over the past year, you could really see it tailed off as we sold off as the markets rallied from the beginning of the year whole. Remember, at the beginning of 2018, the markets had tanked, and then it rallied. It rallied back to all-time highs, and then they sell it off again. They buy it up to sell it off to run it up again. And look what we get. We get Adobe falling all the way down to 260, and it gets this nice little rebound as Wall Street starts to buy them up, and it gets as high as 310. I mean, I can't believe it. Adobe is absolutely one of those great stocks, great volatility stocks that Wall Street loves to buy up. Well, recently with the China trade wars and every other tech stock, volatility stock on the NASDAQ, it has slowly drifted. And it's giving me a great opportunity to get back into Adobe. Because if you remember, I owned Adobe down here. I was writing covered calls. I had my shares taken away, 245. And man, I was just waiting for another opportunity to get in. And if you've been watching my videos, you know, man, I know they're going to bring it back. They run it up to sell it off. That's just how I feel. It's a mindset for me. Well, sure enough, here we are. I have a great opportunity to get some more Adobe shares, but instead of buying them, we're going to write this cash secure put, get a little bit of premium, get the opportunity to buy them $10 cheaper from where the stock's trading now. Remember, the stock's trading for $266. I wrote a 255 cash secure put. Now, why did I pick the 255 strike? Well, not because of the percentage play. A lot of people like to sell premium and always look at it as a percentage play. I definitely do that on the covered call side. I'm always looking for that nice 3% trade. But on the cash secure put side, I love just playing the volatility, picking up some short-term volatility when I think a stock could rebound from a recent low. And that's really where I think we're at now with Adobe. As you can see, these are the Keltner channels. And if you've been watching my recent videos, I love using the Keltner channel for a low entry purchase. If I'm going to buy a stock, I surely would love to buy the stock under the Keltner channel midline. And as you can see, there's that Keltner channel midline, and every single time it's hit it recently, peeled off. So when Adobe found itself at the bottom of the Keltner channel, I'm thinking this is a great opportunity, and that's when I stuck it in. And if I pulled up the chart on the 50-day and 100-day support line, we're looking right about here. So at this point, I believe Adobe is oversold. And if you look at that RSI, I always tell you, we want to try to buy those value stocks when the RSI is below 50. Hell, below 40 is even better. I'll take it every time. And in this case, I use these three indicators to really help me make this decision. Now, with that said, this is a hunch trade. I really feel like Adobe has been sold off, and the news isn't so bad on Adobe. I'm going to tell you right now, the reason Adobe has been selling off is because a brokerage came out and lowered their price target from $350 to $313. $313. I'm sitting there thinking $313, and you're going to sell this thing off some 10%. The stock's now trading at 265x. This for me is a great opportunity to get into this trade. So that's exactly what I did. As you can see, I did a November 15th 255 cash secure put, got paid $4.25. Now let's talk about my plan for this trade, because if I'm right, if Adobe turns off of that support line and heads this way, well, you know exactly what I'm going to do. I'm going to go ahead and let the stock move higher, and every single day that it goes higher, 1 point, 2 points, 3 points, I'll tell you what, that $4 is going to shrink. It's going to go from $4.25 to $3.25, $2.25, and I'll tell you what, I love buying them back if it's going my way under 50%. under 50% of what I originally got paid. I take that profit off the board. Man, I book it as a win. I'll tell you, I've been doing this all year. Hell, I did many cash secure puts just like this last year when the markets were really in flux. It is a great tool in your toolkit that I feel you should really learn, get your experience, watch the videos. Man, all you have to do is go back to my channel, type in cash secure put. You'll see how I generate big profits using this strategy. Now look, before I let you go, we have to talk about my numbers. Mid-October, we're sitting here at 44,000. My goal is 55,000 for 2019. Can I get there? I'm not sure. Like I mentioned in my last video, usually at the end of the year, my trading starts to tail off, and there's many reasons for that. I need to up my game. And how I up my game to get to my goal is gonna be using things like the cash secure put and covered calls. And I'm really gonna have to work my mojo to get where I wanna get. But at the end of the day, look at that cash on cash percentage gain. If I told you I could give you a strategy for which if you learn, you get comfortable with and you do it, and you can really knock down some 18, 24, and 20% cash on cash every year, I'll tell you, it is empowering. It's motivating, and man, it keeps me in the game. And I know a lot of you are experiencing the same success. And I'll tell you what, I love it. Now look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And hey, subscribe to the channel. It's right there, it's free. I've got a great video for you next week where we're gonna talk about the poor man's covered call. It's still one of the more popular questions in my inbox, how to do the poor man's covered call. Hey look, I do wish you all the best in trading. And until next time, may all your covered calls be profitable.